Welcome to Bitcoin Escape Plan. You may have noticed a massive move to the downside recently on Bitcoin, and as I talked about in yesterday's video, we're going to break down the exact levels that we expect to continue moving towards if we cannot show strength at 76.3K. Later on in the video, we will go over the higher time frame analysis just so we understand how close we are to the general cycles or if we are starting to see a new paradigm break out. And then at the very end of the video, I will go over the trade setups, and I just recently entered a position. So make sure you check out that at the end of the video. Now, if you're new to the channel entirely, go ahead and check out bitcoinescapeplan.com. Every Monday, yes, that's today, I release an in-depth breakdown across all the timeframes that matter most for Bitcoin and a couple other goodies over there. Go check it out, bitcoinescapeplan.com. Got about an hour before I release this week's newsletter in your email, and I release videos here on YouTube every Sunday, Monday, Wednesday, and Friday. Let's get into it. So, 4-hour chart. What do we always talk about first? Everybody on the channel already knows. Say it with me, the anchored VWAP. The anchored VWAP is right here. These are the middle bands of the elder VWAP and the downtrend anchored VWAP. If you have no idea what I'm talking about, go ahead and click on courses over here. I explain it in more detail. Essentially, what that means is we've seen a massive failure at the last time that we interacted with that middle band of the elder VWAP, and that is what is pushing us down lower. Now, there's a couple key levels that matter most on the chart, and really, we can look at all the time frames that we want. The only levels that actually matter right now are 76.3K and 73.8K. That's it. Until we are ready to make another move back for 80K, those are the only two levels that we care about, is either 76.2K or 76.3K-ish shows strength or it does not, and then it goes down to 73.8K and it either shows strength or it does not. It's pretty clear cut at those two pivot points are really where we're going to see strength or weakness, with that being included to around 75.3, it looks like. 75.3 is just slightly below where we had our candle closes over here at the end of April. And if we just look at it structurally on the chart, we want to stay above that. If we start to break below that, that puts more pressure to the downside. If we can show strength at around 75.3K, it's another possibility that we can have a bounce there. However, because we've had 3 failures at 82.5K, not even fully getting to that 83K middle band of the downtrend anchored VWAP, it's not looking great at the moment. But again, that's kind of where we would expect to see a bounce, is more likely at 75.3K or again closer to 73.8K. Now, as I am recording this, the price has been breaking down. I was just sitting down and writing the newsletter, and literally as I was writing the newsletter, I was watching this candle just continue to break to the downside, which is why I decided to enter my perpetual trade. Very irresponsibly, mind you, but it's working out so far. So what we're waiting for now is we're having a little bit of trouble at this 76.6K Fibonacci pivot. Again, psychologically speaking, the important ones are the higher time frame ones. So I'm going to go over that a little bit later on in the video. And functionally speaking, as we continue to drop lower now, we're already in bearish territory right now. Like literally as I'm recording this, we're in bearish territory by about $200 for the month of May itself. This was my expectation. I have been talking about this in videos for a while, that I don't know exactly when this run was going to run out of steam, but that was my expectation, that we would start to see a failure on the monthly, just because that's what history tells us happens during this time. So again, since we've seen weakness at that middle band of the elder VWAP, the next thing we can really pay attention to is if we have another reaction to the 4-hour SMA. That's what I talked about briefly yesterday, was the possibility that we could get a break and retest above it. However, this candle that we're seeing right now, which has about 49 minutes left, so that candle will close sometime after I release this video, is significantly lower than we want it to be. This is kind of the candle that we had possibility of breaking back towards the 4-hour SMA, but it does not look like it now, especially if this candle closes below the 76.6K Fibonacci pivot. It's just not super likely that it's going to be able to break back above that. It's going to need more time, which means the 4-hour SMA is going to continue to get pulled down lower. And it's the same thing like we talk about all the time. The lower that an SMA gets pulled towards a Fibonacci pivot, the less clear it is which one is support, which one is resistance. which just, leaves it more open for the price to get manipulated, essentially. So what we're waiting for right now, again, is confirmation of 76.3K-ish, separate from these local pivots at 76.6 and again 75.3. And just structurally speaking, we got to stay above that range over here towards the end of April, or we are going to break down lower. Now, what am I talking about on the higher time frames? On the higher time frames, it's a little bit clearer, I think, where really all that matters is, are we above or below April? As you can see right now, we are slightly below it. We wicked a little bit lower earlier, and now we have slightly gotten back above it. It's still very early. Obviously, it's only Monday. This is also way earlier than I normally make videos. But I'm trying to get it done quickly so I can get on with my day. So that's what we expected, and I've been talking about this in videos for a while. That's what we expected. We don't have any other point on the chart where we have 3 bullish green candles in a row in a bear market year. We don't. So even if we pause May right here, nothing else happens in the next 12 days or whatever in May, this technically still is in accordance with what we would expect, that we would have a red candle. It doesn't have to be a crazy red candle, it just has to be a red candle. However, if it does close there, it would be more likely that we go higher the next month, probably. Which again, same circumstance. We historically speaking, we get about 3 to 4 months of green candles in a bear market, and we've already got 2 of them. So in 2022 we got 2, we got 3, we got 4, and then we wait until January until we get another one. In 2018 we get 1, 2, 3, and that's it. In 2014, we get 1, 2, 3, 4, and that's it. So again, we would expect 3 to 4 months of bullish upside pressure, and then the rest of it, we're just going to continue to fail. So the only other thing that we can keep in mind is our interaction with the monthly SMA. We really only have one instance where that is quick, and that's 2018, 2019. It is important to note this is the last time Donald Trump was president, so it could retrace this somewhat. This is our only sharp recovery of it, essentially, in a period of time of about 8 months, roughly 7-8 months. And we are nearing that now. We're getting pretty close to that now, where we are on month number 6. And I think probability is still more likely that we're going to see continued downside momentum here. It may just chop this week, the point of this week may have just been to get to 76.3, and I would chop a little bit of uncertainty before we're actually able to break lower. I do think that the fact that they're trying to price in whether the Fed is going to cut rates, or I'm hearing now that they may even increase rates, or just not decrease rates for the rest of the year. It seems like there's less certainty around Kevin Warsh stepping in as the new Fed chair than people had been pricing in just a week or 2 ago. That is definitely important for us to pay attention to, as well as the Clarity Act. They move forward more with the Clarity Act on Thursday, as I talked about in Friday's video. Which I just personally don't think is super bullish. I just think that is the news story at the moment that is designed to continue to give a little bit of hope for the price. But just the reality of that news story is the liquidity for the market does not enter until one of 2 things happens. Either the stablecoins are fully live, which as far as I'm aware, legally speaking, is January of next year, or something with the Fed breaks and the bond market breaks and they are forced to print, which has not happened yet. We won't see that happen until we see structural weakness in the stock and energy markets, which we're getting close, but I still think that takes a little bit longer to play out. So if we're looking for more clear signs, we're going to find them on the weekly time frame. The weekly time frame is really where we're going to see a confirmation of either 76.3K, the Fibonacci pivot, being failed to the downside, as well as if we can get strength there, which at the moment, that's what the price is having trouble with. It's barely kissed below that Fibonacci pivot. As you can see, as a continuation of yesterday's video, the weekly SMA itself is now at 74.9K and dropping, still pretty sharp. It actually looks like it has increased the sharpness of its descent rather than it was kind of giving us some signs that it was rounding out, that there was a possibility of, you know, it being consolidation instead of a further descent. Even though, again, historically speaking, we would expect further descent. I don't know why big channels talk about how we're going to see new highs. Like, that doesn't make any sense to me. My whole goal with this channel is just to give non-biased, like, I want to read what the chart tells me. I would like Bitcoin to go lower so I can buy more. If Bitcoin goes higher, I already have plenty and am excited to get that exposure, but I have no like bias really. It's more just like, I want to pay attention to what the chart is telling me. And the chart is telling me that the 4-year cycle is still in play. So I don't know why other creators talk about how the 4-year cycle is over, other than I guess just to get views. But, you know, like and subscribe so I can get more views telling the truth instead of having to say ridiculous things on camera. So that's really the most important thing, is 76.26, which again, colloquially speaking, 76.3. And again, 76.3 is also the monthly close. So not only is the monthly close important, you know, because again, if we start to show weakness on the monthly, you know, we have a long way to go that we can give back. We can give back all of April, essentially, you know, which puts us all the way back down here towards 68.2K. Now, like I've talked about in every other video, I would expect us to stop before that at both 73.8K, being the previous all-time high in March of 2024, super important psychological level. And then I like, this isn't like a hard and fast rule, like nobody taught me this, but this is the middle of this range, is about 70.3K. And to me, what I interpret that as, all of these candles, when we were below that point, it put more pressure towards a retest of 64K, whereas all of the candles where we are above that point put more pressure towards a retest of 76.2K. So it's pretty much the same thing here, you know, where we did not quite get to the midpoint of this range. I don't know where that is exactly, but for me, colloquially speaking, I was referring to it as 86K. Again, I don't know the exact position for that, and I'm not going to use a measurement tool because you already know, if you follow this channel, my sticky keys hate me. But it's roughly around there, which again, I've been talking about that since January, February, that I expected a rise to 83 to 86 and to see weakness at that point. So currently, I'm correct. You know, I have no reason to change that analysis at the moment. One, because it's already happened, and two, because you'll kind of notice this for anyone who's been following my analysis, whether here or on Threads. I like to kind of like zoom out a little bit to understand broadly where the chart is headed next, and then I kind of just set my feet and wait, essentially. Like I'm not really flip-flopping a lot. Even when you hear me talk about like it could go higher or it could go lower, I'm like pretty clear about where those points are in either direction. It's very simple. Like, either we see strength at 83 and 86, and that's what gives us a possibility of a higher rise. I personally don't think that we're going to get that. We don't have any instances that could allow for that. The only real instance that we have is on the 2014 part of the cycle. We have multiple weeks above the weekly SMA. That's really it. Like, that's it. That's the only time that we have on the chart where we have an extended period of time above the weekly SMA. Every other time we hit it, though, even in that cycle, we still failed down, period. You know, like, that's what happens during this stage of a bear market. So what is more likely to happen is we have a period of, you know, 2 to 4 weeks, essentially, we're above it. In most instances, it's 2 weeks. So we're already at an anomaly right now that we are at closer to 4 weeks. I believe we're at 4 weeks at the moment. And it still remains to be seen whether this is going to be the week where we retest or not. I mean, right now, it looks like it. It looks like this week is going to be the week that we retest it, just because, again, the psychological prominence of 76.3K, I don't think can be overstated. You know, I talk about it a million times in today's newsletter. I really think that is, it's not necessarily going to be definitive, like a concrete wall, but it's going to be very clear for momentum. Like if the price cannot hold that, there's only so many attempts that we get back at it before that's going to result in wanting confirmation of 64K. So that's what we're waiting for at the moment, is at what point does it interact with the weekly SMA, and does it show strength when it re-interacts with the weekly SMA? We don't have any instances where that is the case. Even in that 2014 example, when it broke above and stayed above the weekly SMA for 12 weeks, when it did come back to the weekly SMA, what did it do? It failed. So even if we stayed above it for a couple weeks, it doesn't matter. It's going to fail. And this is crazy to me when I see other people talk about videos. I've seen a bunch of creators that have a ton of views who were talking like a week ago about how we were going to continue to see highs for Bitcoin. It doesn't make sense to me. You know, like the cycles are very clear that we would see a local failure towards this section of April, May, and then we would expect a further drop into the end of May, into June, and then one last lower high into July. This is like clockwork. You know, we see this pretty much every cycle. So me personally, I don't understand what people are talking about when they're saying that this time is different. I don't know what chart they're looking at, but it's not the Bitcoin chart. So locally speaking, that's what we want to look for, is do we show strength at this Fibonacci pivot, which again, it is Monday, my friends. It is early in the week for us to already be breaking this Fibonacci pivot. So that means that we got to spend the rest of the week above 74.9K if we have any hope of, one, we don't want to close this weekly candle here. We want to close it above here if there's a move higher. But if we're going to close there, that means that whether it's this week or next week, we're going to interact with the weekly SMA. And typically speaking, when we interact with the weekly SMA during a bear market, it does not end favorably for the price. The price will continue to descend at that point. All right, let's talk about the perpetual trades. This is very irresponsible. I want to be very clear. Anyone in my membership, do not do what I did today. So I did enter. I'm currently up. I'm going to continue to be up by the look of this chart at the moment. I did enter, I guess it was like, whatever, maybe like an hour ago, something like that. I entered when I saw this reaction to 76.6K starting to show weakness. When I started to see that, you know, I was thinking to myself as I'm writing the newsletter, even as I was thinking about what I want to say in this video, really 76.3K is like, you know, the difference between being above that and below that is pretty significant. Like it's very much like a psychological level where on both the monthly and the weekly timeframes, we have just a lot of evidence around, okay, is the price bullish or bearish? It is objectively bearish now, period. Like that is what the chart tells us at the moment. So if that is true, that means that we have all of this from April that we could potentially retrace now. Doesn't mean that we have to, doesn't mean that we have to go lower, but we have asked the question of how much of this candle do we want to consume? So that's kind of like the game that we're in now. Again, as I've talked about before, the other key levels are going to be around 75.3K and around, this is showing as 73.1, but 73.8 is the actual important one. And 73.1, obviously, would just show that 73.8K is resistance instead of support. So that's how we would think about that one. But functionally speaking, for me, this is not a, like typically speaking, this is what we talk about all the time in this chart. When we see it on the bottom of the Bollinger Band, what does that mean? That means we have a long entry. So why did I enter a short here? Even though it's very irresponsible and it's against my own rules to enter a short at that time, purely because, again, when we see a flip bearish on the monthly candle, we have to acknowledge the higher time frames. Now, I don't necessarily take trades based on the higher time frames in terms of like candle breaks or whatever, because you'd be waiting a long ass time if you were only waiting for Bollinger Band breaks. I mean, all of those are great. Those are all excellent short entries, but the candle's not outside of it. You know, it is here, but you would have been so early. Like, I can't imagine like shorting the price in November of 2024. So what, you're going to be negative for all of 2025? Like, it's not practical to use the higher time frames, I think, exclusively. And even in these instances, I think it's kind of hard. Like, you get a couple weeks where you can get upside momentum, but then very quickly you got to get out of it, and you don't really have, I mean, I guess you have clear exits if you just consider the higher time frame Fibonacci pivots being like crucial evidence. You know, like from 59 up to 76.3K in the first place, probably again would have been a sufficient move. But I really like the lower time frames for giving me basically like an accurate picture of, okay, the price is behaving in a way that tells me we're going to continue momentum in one direction or the other. And again, it's really a combination of understanding the higher time frames and the lower time frames that allows you to make that type of analysis. So this is not financial advice. This is not me advocating for you to enter a short position at this time. The last time that you actually had clear evidence of a short was on Sunday, May 10th. That's what an actually good entry looks like for anyone who is curious. This is what an actually good long entry looks like. This is what an actually good short entry looks like. Not a very, it was a quick one. You'd have to wait in that one for a long time. Technically, you would be in profit in that one had you entered there. But again, that's what we want to look for, is we're either looking for scalps, which is how I'm treating this one that I just entered. I'm treating this as a scalp. I'm treating this as I want exposure to the move at either 75.3K or again, I'm inclined to think that we probably show structural weakness at 75.3K. That's why I chose to enter, is I basically just want to, at the very minimum, I want to capture from here to 75.3K and potentially down as low, like I said, for 73.8. I think it's very possible that that is actually going to be the more important point, mostly based on this guy. We closed right around there here. And again, if we break, it really depends on if we touch the weekly SMA. If we touch the weekly SMA, then I'm not going to close that short. Like, I'm going to let that short run, essentially. If we are able to show some strength here before even getting there, that's going to be around that 75.3K level. Again, it'll be clear, and I'll have to consider at that time if I just want to close the scalp. Still pretty happy with my perpetuals and futures trading. It's still not a crazy large account. I only have like $1,000 on there, just while I'm really like gaining better understanding of what is my best strategy. I understand my entries very well. You know, I don't always listen to them, but the entries are clear. You know, you want 2 candle closes outside of the Bollinger Band, either on the bottom or the top, that are kissing, and that's it. Those are always, as far as I've back tested this strategy, those are always your clearest signals of a long or a short entry. Not quite this guy, not quite this guy. This guy's good. Even this guy. Not quite as pretty, but technically still counts. Those happen all the time. Like, those happen every couple days. That's why I created a membership around it, is because they just happen all the time. So you kind of have to decide for yourself whether you want, you know, long trend exposure, in which case a perpetual contract is better, or whether you just kind of want to catch whatever the move is, in which case it may make more sense to be scaling futures contracts. Obviously, the weighting is a lot higher for, or rather the volume, is way higher for the perpetual contracts. And I think just kind of in general, it really depends on your trading strategy. You know, like, there's nothing wrong, I think, with taking multiple scalps. You know, like this guy right here, had you caught that right there, 35% on your money is really good at 10x leverage. Like, that's really good. You don't have to do that many times in a month to be making significant income. So I like this strategy just as a way to be able to profit off of my knowledge of the Bitcoin chart, which is primarily, again, why I made this channel. I made this channel so that I have an excuse to sit down and look at the Bitcoin chart for 30 minutes at a time, and I am forced to speak my thoughts out publicly. I have to display my thoughts in a way that is clear enough for you across from me on your laptop or on your phone, that you can listen to what I'm saying and be able to understand better about how the price behaves. At the end of the day, this is just an education channel. Like, I can't control what you're doing with your trading and what you're not doing with your trading, nor am I interested in controlling that. That's your job, not my job. But that's why I have this channel, is so that I can talk out my own thoughts of it. So hopefully sometimes you guys will correct me if I'm very clearly off about something, but I really use this as just kind of like a public diary for me to be able to speak out. One, what the chart is telling me. Two, what history is telling me, and then basically just reacting to it. So again, in this particular instance, is a very irresponsible entry. Like, I'm already up on the contract, but it's super irresponsible for me to enter when I did. Like, I don't have a rule set for that, other than, again, showing weakness on the monthly time frame is enough to beg the question of how low into this April candle are we going to dip? And I would rather have some exposure than not have any exposure. Again, it would have been better to enter this guy. This is not a break of the Bollinger Band, but it's kind of the same case. Anytime you get a candle that looks like that, that's a clear short, my friends. Anytime you get a candle that looks like that, that's a clear long, my friends. It's not always super, super obvious. It can be hard to, that's why I like using the Bollinger Band, and specifically the 4 hour. I just think that the 4 hour has the cleanest entries, So for anyone who is like trying to refine their trading strategy, or just wants to lose less money on their swing trades or whatever, I really think that the 4 hour is your best bet. The 4 hour is going to give you the cleanest entry points. You got to be very specific about what you're using as your exit points. I typically use either an arbitrary 1%, or I'm paying attention to my Fibonacci pivots and my SMA. And then for the most part, it's just combining that with the historical analysis and understanding the context of psychological levels, which, as I've said multiple times, is 76.3K and 73.8K. And the only other thing that we have here is, again, the structural reality of around 75.6, 75.3. If we start to see weakness there, then we broke out of this trend, and then it's going to beg the question for the next range, which is probably closer to here, I guess, 73.8. So like I said, so a lot of times we have multiple points of confirmation on those key levels. That's why they become such like important psychological anchors. So basically speaking, we either are about to show strength at 75.3K, or we're going to show weakness, which means we're going to 73.8K. Now, 73.8K for me is kind of like the last hope that we can get another bounce back towards 80K or higher. But historically speaking, there's not really any reason for us to get that. There's not really any reason for us to get a fourth attempt at this middle band of the anchored VWAP, other than just like over a long enough time period, we will reclaim that. I'm not convinced that it's now, but that's essentially what we're looking for, is do we show strength at either 75.3K or 73.8K? It's too early to tell. Like I said, we don't have an FOMC meeting until June. The stock market is still ripping. Gold is starting to show some structural weakness. We have to think of Bitcoin as more similar to gold than the stock market. I know some people like to, correlate earnings from the stock market to what the price of Bitcoin is doing, but it's just not, I don't see enough of a correlation to that. I really think Bitcoin is its own thing, but it's also just the reality of a 24/7 tradable asset is, regardless of what's going on in the other markets, this is going to be one of the first things to sell off when there is negative news. It's going to be one of the first things to sell off when there is positive news. Like, it's just, that's the reality, is this is the easiest thing to get in and out of. And during this time of the cycle, we would expect more people to be getting out of it than into it. So That's all I'm going to talk about in this video. On Wednesday's video, I will give another update on this essentially, but I would expect we'll have more confirmation of either a retest of 75.3K or 73.8K by that time. So that's what you're going to want to look for between now and Wednesday's videos. If you have any questions, feel free to leave them here or go over to Threads. I did just start posting on Threads again. Starting to get my content feel again about my priorities. My main priorities are here on YouTube and over on the newsletter. But I'm starting to really see how I can use the other platforms to my advantage as well. So go check me out on Threads. You can get all that through the website, bitcoinescapeplan.com. Let me know if you have any questions, and I'll see you in Wednesday's video. Bye, everybody.